R. Vardarajan, the Managing Director of Repco Home Finance, joining us on ET now. Hi, Mr. Vardarajan. Brokerages are clearly being cautious on NBFCs due to rising interest rates. That's, of course, one of the fears. But even if you look at the kind of news flow that has been coming out of New Delhi about how these lists of NBFCs are being created by the center, by the Corporate Affairs Ministry to ring fence the financial services sector, that doesn't augur well for the space at all.
No, see, among the NBFC, I can talk about home finance. See, as far as the home finance is concerned, we have processes set in, and it is definitely doing well, and they are all well secured. Therefore, it is going to have a good progress for the housing finance companies. There should be no doubt on that.
That is that if you look at the Financial Intelligence Unit, it is coming out with a list of high-risk NBFCs. Last count, there were about 9,500 such names on that list. So before I get company specific, has that impacted the sector? Has that had an impact on companies like yours that may be going out there to raise funds or just doing business in the country?
That's why I clarified to you, as far as the housing finance companies are concerned, there may not be any doubt about their performances as well as the quality of their assets, because all the loans, I'm not talking about the NBFC in general, I'm talking housing finance companies in particular. See, all the housing loans are backed by the mortgages of houses. And also the LAP portion also is fully secured, and there is no unsecured portion of advances as far as companies like ours is concerned. And also the processes are very tight. We have the LTV norms there, and we also have this IIR installment income ratio. Therefore, the processes are very tight as far as the housing finance companies are concerned among the NBFC sector.
Yes, and more regulated space within NBFCs for sure, Mr. Vardarajan. This is Siddharth here joining in conversation. Now, I'll come to, more business dynamic kind of questions. Now, there are a lot of brokerages which are coming out with a cautious note on NBFCs and at large, not just housing finance. And what they say is that almost 54% of your borrowings are from commercial banks, and we know that yields are increasing and commercial banks are also increasing their MCLRs. That will definitely increase your cost of funds. Now, how much the cost of funds will going to increase? Will you be able to pass it on to the end users, because NIMS is what is your reward for taking the risk of borrowing at a low cost and lending at a high cost? What would be the impact of this rising yield?
See, as far as the cost of funds are concerned, we have the borrowing both from the banking sector as well as the market borrowings. In fact, as far as the market borrowings are concerned, we are only replacing the high cost borrowing with the low cost borrowing, and we are able to maintain this. In fact, in the past, if you see the Q3, the cost was only coming down, which we have passed on to our customers. But in the rising interest rate scenario, all our home loans are all under the floating rate regime. Therefore, we have the pricing ability there, and our ALM constantly look at the cost as well as the pricing, and we ensure that we are able to maintain the spread of around 3. If you see the past, say about 20 to 30 quarters, if you continuously see, in all the scenarios, we are able to maintain the spread. Therefore, we are very confident in the future also we will be able to have the spread, and there may not be any strain on the spread.
Okay, Mr. Vardarajan, we are running out of time. Thank you so much for talking to us here on ET Now.